Hey, Steve Saretsky here. As always, Canadian real estate market update with a particular focus on Vancouver. If you get any sort of value or entertainment out of these videos, all I ask you hit thumbs up and subscribe. Questions, comments, put those below. So I sent out a tweet this past week where I basically said, we all know this will end in a debt crisis, right? And sort of, the thought behind that was, I have to laugh because people are like, oh, this guy's a shill, pumping the real estate market. And again, I have to laugh because the reality is that let's not forget what's happening in the big picture. So the thesis behind, being bullish on the real estate market right now is that you have massive liquidity injections. You are just pumping trillions of dollars of quantitative easing, freshly printed money, whatever you want to call it, into the financial system. So everything goes up. Canadian real estate, as overvalued as it is, goes up. GameStop goes up. Okay? Doesn't matter what it is. We got Blockbuster Video, didn't even know that was still around. That stock's going up. So again, this is all just a function of liquidity. It's creating, obviously, this rampant speculation. It's why you have, house prices going up. So my view is that, listen, house prices are going to go up, real estate's going to go up, gold's going to go up, Bitcoin's going to go up. Everything's going to go up because of what these policymakers are doing. Now, let's not forget that this will ultimately still end in a debt crisis. So the reality is that you have basically, two options. You kind of have to, you don't even really have an option, to be honest. Either way, you're kind of screwed. So you can invest in assets. You can invest in whatever, gold, real estate, stocks. Arguably all of them in bubbles. Or you can sit in cash in the fiat currency that is being heavily printed and heavily manipulated by governments, and you will lose there. So you're kind of forced. You kind of have to play. So you look around and go, man, let's be honest. As someone right now that is currently bullish on the Canadian housing market, I will be the first to admit it is an asset bubble. Canadian real estate is overvalued, but it's a function of a currency being devalued. And so I have to laugh because I'm doing this video. I'm like, okay, what am I going to talk about this week? GameStop, et cetera, et cetera. And then I stumble across this YouTube interview that was just released with Cambridge House, I believe, and our ex-Prime Minister, Stephen Harper. And I don't care if you're conservative, liberal, NDP. When your ex-Prime Minister comes out and does this long-form interview, I think it's worth listening to. Again, forget the politics behind it, but he had some very interesting comments. And they basically echoed everything that I've been saying in this channel. And I have to laugh because I think some people think it's almost like, if you put this stuff out in the mainstream media, it almost gets viewed as like conspiracy theory. Like, this guy's talking about central banks printing money and digital currencies and rampant asset inflation. Like, it almost sounds a little bit conspiracy theorist. But, I have to laugh because this interview comes out with Stephen Harper, and he has some very interesting comments, much of basically everything that I've been talking about. I'll put a link in the description below where you can go and actually watch that full-length 45-minute interview. And I would certainly encourage you to do so because I think it is really telling. He's clearly in a position now where he basically, in this interview anyways, he gives free rein, his full thoughts essentially on the whole picture that is playing out. And so I want to clip to right now his thoughts on basically the ramifications of what policymakers have opted to do in order to fight the existing crisis of this global pandemic on our hands. So let's clip to that video right now.
But the result was that government mandated the recession. And government's intervention in this recession, for the most part, has been not to promote or not to spark economic activities, so-called stimulus, not to stimulate economic activity, merely to provide liquidity in the absence of economic activity. That's completely different than what we were trying to do in 2008, 2009. I should add, much more dangerous in the long term than what we were trying to do in 2008, 2009. And the consequences of this around the world, I'm not trying to talk about specific governments here. The consequences around the world are very clear. We will leave this recession, the world, with a debt overhang that dwarfs what we saw in 2008, 2009. And what we saw after 2008, 2009 was, after financial crisis, recession, somewhat of a recovery, was in a series of of sovereign debt crises in various countries, Greece and Italy and Portugal and Ireland. We know them. This time, the debt overhangs by governments as well as businesses and households are much larger. It's absolutely the case that we will have all kinds of solvency crises around the world, and we will have significant sovereign debt crises in the near years to come, very soon.
But this is exactly what I've been saying, Mr. Harper, is that you have, partially under his watch as well, have created this sovereign debt bubble. So the largest bubble out there is in sovereign debt. So you have massively over-indebted governments. The debt will never be repaid. It cannot be repaid. And you can argue that maybe it doesn't need to be paid because you can print in your own currency. But the largest bubble in the world today is the fact that people are willing to accept, 10 or 20 basis points or 30 basis points or 50 basis points on longer duration government debt, on 10-year government debt, on a government that continues to print money. You're willing to be paid less than 1%. That is the largest bubble ever, because it's been perpetrated by the central banks. And so the whole global economy, as he says, Mr. Harper says, is that you have created an entire debt bubble. So you have a debt bubble in sovereign, in public debt, in household debt, and in corporate debt. And the reality is that, again, by artificially suppressing these rates, and by, obviously the attempt is to keep the game going, the central banks get bigger and bigger and bigger. And the result is...
First of all, it's important to understand what is occurring now. Because we constantly hear there's all this injection of liquidity through low interest rates, quantitative easing, in the case of the Bank of Canada, actual creation of cash. And yet people say, but we don't have inflation. Well, that is not true. We have massive inflation. It's asset inflation. We've had very little consumer inflation, but we've had asset inflation because, and why would we have consumer inflation? The vast majority of these dollars have been dedicated towards towards banks, large corporations, high income individuals. They've gone towards assets and asset purchases. They haven't gone to the ordinary worker and spender and consumer. And so we already have an inflation problem. And I am concerned, I'd be very frank with you about this. I'm very concerned that we have bubbles everywhere. In real estate and stock markets, you name it. The Fed and other central bank balance sheets have not just been buying government securities or their own securities. They've been buying the security of other governments in Canada. It's been unprecedented what the Bank of Canada has done. It's bought provincial securities initially because the government of Newfoundland and Labrador was on the verge of bankruptcy. It's bought corporate securities at an unprecedented level. So we've got I think we've just got enormous bubbles, and we've got a debt overhang, whether it's government, I say corporate, or household, that it is hard to see, how that could be unwound in a meaningful way. So as I say, I think you're going to have crises. And when you have those crises, governments will be confronted with a series of options, none of which are very good, but there will be austerity. Austerity is, people complain about austerity, but austerity is rarely done as a choice. Austerity is usually done because markets will not lend you the amount of money you want to borrow. And there will be governments that hit that wall as COVID-19 begins to pass and some economies, major economies, begin to recover. There will be governments that cannot borrow the amount of money they want to borrow. They simply will be unable. They will have a financial crisis, and their choices will be a combination of austerity, devaluation and default, or frankly, general inflation. And so I think you'll see in different markets combinations of these things. The big question is the United States. How long will the world loan trillions of dollars at 0% to the United States? Right now, I would say to you that in the short to midterm, the market appears willing to do that, but it's not going to do it for everybody in the world.
Mr. Harper is entirely correct. You have massive asset inflation, and anyone that is paying attention can clearly see that you've created these massive bubbles in Canadian housing, in stocks, etc. And I just find it very interesting because you now have, again, your ex-prime minister opening up in a long-form conversation, and none of this would obviously be shown today in mainstream media. Could you imagine CBC network picking up, in doing a long form interview with, current Prime Minister Justin Trudeau and asking him, what he thinks about the current outlook and the current picture? Could you imagine Justin Trudeau coming out and saying, yes, we have massive inflation, we have massive housing bubble, we have a massive, misallocations of capital? Of course they can't come out and say that. They have to pretend that everything is okay, that there is no inflation. Look at the CPI. Just focus on CPI. It's less than 2%. The central banks are doing their job. There's nothing to see here. The housing market is sustained. We have population growth, not enough condos being built, et cetera, et cetera. It's all a bunch of, it's just smoke and mirrors. I find it very interesting. It's almost relieving to kind of see, okay, this is, he can't say it when he's in office, but you have the kind of the free reins now that he's out of the picture and it's not his problem anymore. All of a sudden he goes, yes, oops, we created this bubble. But he goes on to comment on, again, sort of the central bank digital currency and the growing roles of central banks, which is, again, something that I've talked about. So very relieved, that this is publicly available and sort of mitigates, I think, a lot of the notion, again, that this is almost like fringe conspiracy theorists, that like you just don't see any coverage of this. Nobody is talking about this. There's nobody in mainstream that talks about it. And this is, again, why we created this channel, is just to have a dialogue and a conversation about what is happening behind the curtains and how obviously you can protect your own wealth, your own hard-earned capital, because this is a topic that I think is intentionally left out of schools. But he goes on to talk about the role of central bank digital currencies. So let's clip to that right now.
I guess any thoughts I have about it are subordinated to my general concern about monetary policy around the world. I am quite concerned about several aspects of monetary policy we're seeing in major centers. Government of Canada, the Bank of Canada under my government did not do quantitative easing. I'm not saying I wouldn't have done it this time, but it's a policy I'm generally skeptical of. And I am, just very worried about the kinds of assets central banks have been getting into. They're increasingly moving, in my judgment, from being merely institutions that monitor the money supply and monitor price stability, and they are increasingly becoming kind of a general banker, which I think is not their role and very risky. And I feel this about, well, it starts with the Federal Reserve and all others. So I'm, ultimately, if you have a digital currency and the purpose of the central bank is to control inflation and create a stable currency and price stability, then, digital currency is just kind of an evolution of the marketplace. But if it's part of a series of what I think are wild experiments as to the role of central banking, then it worries me a lot.
Let's not forget that the Bank of Canada now owns 36% of the entire government of Canada bond market. And that is growing. They say, okay, we're comfortable with 50%. You're going to hit 50% by next year. So you're going to own 50% of the government bond market, but understand that there becomes a situation where there is no buyer. The only buyer becomes the central bank. So the central bank has to play this larger and larger role. And obviously with the ability of central bank digital currencies, as we talked about before in previous videos, is it gives them the ability to further introduce behavioral economics of being able to influence people's lives and purchasing decisions and saving habits, for example, by having a central bank digital currency. And so these are all things that are coming. These are all things that are obviously more actively being discussed, but certainly not in the mainstream, kind of in the general finance space. For those that are willing to learn and to understand, there are so many moving pieces, and so that's again what we continue to try to bring in this channel. So I would love to hear your thoughts on this week. I would certainly encourage you to check out that full-length interview with Harper. And again, put your politics aside. I, for one, am not a political person. I obviously follow along with it, but I'm not pragmatic about who I vote for or the policy decisions I like. I find that there's a lot of the policies that I like on the left that I think, and there's a lot of policies that I like on the right, and I think it's almost like a combination that you probably should be introducing. But it seems that we are getting so divided again between the rights and the lefts, and you can see this widening social friction that is really being divided, I think, by all the inequality that is being created. And so you have this again, massive, where basically in order to sort of get ahead in society, you have to be heavily invested into assets. And if you're not, you're getting further and further left behind. And this is creating, all these fringe politics, tax the rich, wealth compensation, ban foreign buyers, etc., etc. These are the policies, though, that they are creating. By creating these massive asset bubbles, people are starting to figure out that there's something wrong in society. Something isn't quite right. And I think that this whole GameStop thing and AMC and everything that is happening is evident of what we just talked about. It is, let's take down the institutions and let's rewrite everything that is happening. And this is basically, if you haven't read the book, The Fourth Turning by Neil Howe, I'd certainly encourage you to do that, where he basically argues that societies go through seasonal patterns where you kind of have basically what he calls now, we're basically in what he calls the fourth turning, which is essentially where society begins to lose confidence in the institutions. And you get more of this political friction, you get more of this divide, this social divide, and eventually you end up basically tearing down your existing institutions and basically rebuilding and coming out the other side. And so I think that book has probably never been more important than it is today, because it is so spot on with everything that is happening. And so I'll leave it at that for this week. I don't want to ramble on. I really think that the Harper interview was really good, because again, you have an ex-prime minister, regardless of what you think of him, opening up about his views on everything that is happening, and then everything that's happening. A lot of it, don't forget, I'm not going to let this guy off the hook. A lot of this was manifested under his watch. Let's not forget that Harper, back in 05, 06, you had zero down, 40-year amortizations. You blew the housing bubble. You bailed it out in 2008 and 2009, allowing it to continue, allowing people to continue to obviously speculate that real estate never goes down, because, hey, look, it never went down in 2008, 2009. And now, again, you've kind of doubled down again. Never goes down in 2020, pandemic, recession. And so you're continuing to incentivize or encourage speculative behavior. And again, you end up creating larger asset bubbles, which again is what we have today. That's not to say the asset prices won't continue to go up from here. I believe that they will. But again, it will ultimately end in some form of a debt crisis or some form of debt jubilee, where you have to basically reconfigure the financial system. So I don't know if that's, again, 1 year away. Is it 5 years away? Is it 10 years away? I think it's probably much sooner than 10 years. But that's, again, why we do these shows, to continue to watch, continue to monitor, and continue to have these conversations. So see you next week.